Welcome to the globalautoindustry.com audio interview series. I'm Ron Hesse, and today I'm interviewing Todd Sutherland. Todd is Director of the Research Tax Credit Practice with UHY, a international CPA firm. He has over 20 years of accounting experience across a wide industry spectrum. He specializes in helping clients claim research and development tax credits and defending research and development tax credit claims under IRS examination. Today we'll discuss U.S. R&D tax incentives for automotive manufacturing. How you doing, Todd?
I'm great, Ron. Thank you. Thank you for asking.
Excellent. Let me start off with this basic question. What is the research tax credit?
Ron, the research tax credit, it's a federal incentive created by Congress to encourage investments in innovation and job creation. It was created back in the mid-1980s, and through over 30 years, different presidential administrations have evolved the credit to be very applicable to a number of industries, middle market, large companies, and a wide range of opportunities. It's a tax credit equaling a dollar-for-dollar reduction in federal taxes owed. There are also state credits for about 39 states that typically follow the federal definition, but have typically a smaller credit value. These tax credits are in addition to research expenditures. While the research expenditures can be broadly defined, tax credit is limited to qualified wages, qualified supplies, and contract R&D. The benefit of the research tax credit equals about 7 to 10% qualified expenditures.
What is the biggest misconception related to the research tax credit?
Ron, in my experience of 20 years of dealing with the research tax credit, I would say the biggest misconception of the research tax credit in its definition. The traditional term of research and development is not required for eligibility for the research tax credit. Simply put, the research tax credit is available for companies that develop or improve products and/or processes. In the automotive world, this can include product development and product improvements. So a good example would be the labor commitment related to a product development process. For example, a stage gate process and all the folks that contribute to such a process directly as gatekeepers, signers, as well as production folks supporting the product development process. It also can include process development. A good example in the automotive industry is the cost of setting up production capabilities to achieve PPAP certification and the cost of first articles or samples necessary to achieve such a certification.
Are there particular opportunities with the research tax credit in the automotive industry?
There are. It's a very mature industry for claiming R&D tax credits, from the OEMs down to all the tiers that support components of the OEMs. There's a concept called cascading credits. So as you have an OEM, the OEMs claim millions and millions of dollars of tax credits, but also the tier companies that design and develop the components used by the OEMs can also claim credits on the development of the components that they make for the OEM. So the hierarchy of making parts and contributing those parts as components to larger parts, effectively to the OEM, all those parties can claim credits in various degrees. The second opportunity is called what they call self-constructed asset. And this is a recent development. The research tax credit definition was recently expanded to include cost of component parts for the development of a quote-unquote pilot model. And the term around pilot model is very broad, and effectively it can include an item that must be manufactured or sold in order to address design uncertainties. The item can be fully functional, a fully functional model. So in the automotive sector, this can include tooling, capital expenses related to cell development of an automotive part. So every 5 years that a new part comes out, there's certainly going to be some capital that's going to be eligible for setting up tooling and the assembly program, as well as within those 5 years, every time there's going to be a modification to that 5-year program. In addition to self-constructed assets and the opportunity for all the parties in a cascading credit hierarchy taking credits, there's been really 2 positive tax court cases for tool and die companies for claiming research development costs. One instance was where the taxpayer designed and manufactured tooling in-house. And the second instance was where the taxpayer had authority to design the tooling and then adapted the tooling into its particular production process. In both of these instances, these were landmark cases where the taxpayer succeeded against the government or the Internal Revenue Service, qualifying the tooling, the labor to design the tooling, the labor to set up and assemble the tooling costs themselves, whether it be a mold, stamping, things of that nature, as well as the first article cost to prove out that the tooling process would be successful for commercial production. And then finally, with regard to opportunities in the automotive industry, in consideration of manufacturing 4.0, as well as COVID, a number of process developments have taken place. So in terms of COVID, when you have industrial engineering related to improvements related to human movement, better efficiencies, better processes, in terms of touch points, those are process developments that could be R&D related. In terms of manufacturing 4.0, you have automation, you have computer-aided manufacturing, or the acronym CAM, you have additive manufacturing or 3D modeling, digital manufacturing, and then Kaizen, Lean, Six Sigma type of events. All those things that improve the manufacturing process are drivers of research and development eligible for the R&D tax credit.
Todd, are there any IRS audit concerns with claiming a research tax credit? Is this an annual benefit? And what if a business can't use the credits this year?
Good question, Ron. The research tax credit is considered cash. As I said before, these are dollar for dollar reduction in tax payments owed. And the government and the Internal Revenue Service views the research tax credit as a high examination priority. Therefore, the calculation of the credit and the substantiation of the tax credit must be addressed with equal importance. We can typically accomplish these goals through about a half-day visit at a taxpayer's facility or location. The research tax credit is an annual benefit that, if not used in the year that it's earned, it can be carried back 1 year and carry forward 20 years until used. So in my mind, they're one of the most, if not most robust tax assets that the tax code offers. Furthermore, startup companies that have yet to become or slightly profitable can use the research tax credit to offset payroll tax when they have yet to generate federal taxes to offset the credit in the traditional manner. So this is very beneficial incentive to companies that are cash tight at the start of their growth. Ron, I'd like to also mention one other thing, that the record keeping requirements, I often have the question of, is there a particular requirement for keeping records, or do we have to go back and create records and time reporting? The answer to that question is no. When Congress enacted the research tax credit, they specifically stated that it did not expect the record-keeping burden on a taxpayer to be overburdensome in order to receive and claim the research tax credit. There's no requirement to go back and recreate records or track time specifically to R&D type activities. As an expert in the research tax credit program, we can help taxpayers understand the type of contemporaneous documentation and records that are sufficient to claim the research tax credit that the company has earned. If I could leave you with one kind of final thought in closing, the research tax credit is available to more than traditional R&D activities. So like I tell a lot of my clients, if your company applies concepts of engineering in any fashion or models items like via CAD or BIM, you're very likely eligible for the research tax credit program.
Thank you for your great insight. And that concludes today's interview. Everyone, have a wonderful day.